Hi everyone, I'm Ken from CryptoTradingKS and the inventor of the CTKS method and BORSOG trading. If you're new, a very warm welcome and welcome back KS family. My mission is to help you to be more of a financial blessing to yourself and those you love, gaining real wealth and positive excellence in the process. Please note, I don't have WhatsApp or Telegram. Let's run the numbers. Bitcoin is currently up 0.30% to 23,069. Ethereum is down 0.23% to 1598. In the last trading session in the main markets, and Masterclass students, you get my live charts in TM6, we saw the VIX falling down, continuing its descent. That rallied the Nasdaq 100 and the other major indices. We saw yields starting to turn the corner, starting to go up. I've been noting this for quite a few days now. It is definitely on the cards. We can see the dollar, the DXY starting to bottom out. There's a lot of sell pressure here, but it's still starting to bottom out, and gold is feeling that heat. Bond prices are retracing. They're potentially rolling over. We can see that a lot of resistance around the 89.21 mark in terms of oil. And when we look at junk bonds, we saw junk bonds lost its first level of support. They've now lost a second level. They're over a third, but they're starting to weaken. And Masterclass students use the EC method to understand this price momentum. We're going to look at Bitcoin, and we're going to actually drill in a bit more on this chart. When looking at price action like this, you want to form a bit of an understanding or a bit of a judgment. Where is the immediate support and resistance playing in? We can see a first level of support just through this particular price action, connecting the lows. Then we want to look at if this particular trend is weakening or strengthening. So we join this low to the next potential low. And what are we actually seeing? Price is starting to weaken. This sell area between around 23,258 and down to around the $23,000 mark has been very, very strong. Even though it got pierced, the sellers came back and pushed the price down. It got pierced again. The sellers pushed the price down, but the buyers are still piling into the market, and we're seeing an upward trend. The next step, we need to actually understand how this particular support or now resistance is playing out relative to this particular part of the top price action. Let's have a look. We want to understand what is actually occurring with price, so we draw a resistance line in here to see where it got cut and where it could be supported. We're not cherry picking. What we're actually trying to do is to draw highs and lower highs together. But what about this one? Let's have a look if we actually factor that one in. We can see that the resistance has actually turned into support, but we've got a weakening of that secondary support line. This is a tertiary support line. This is a secondary one. So long as price makes its way back up through, for example, if it comes down to around 23,000 or 23,950, that's more than fine. So long as price keeps on attacking this selling resistance area, it's actually looking quite positive. But what if it starts to decay? What if it comes in to around 22,800 or below that? If it goes below that, we may see either a strengthening of this support line, depending on how it gets down there. This is a really key thing with understanding how to trade. One thing that we've always seen with trading, we can get these long tail rejections. Price could come down, test this, and then rally up. But if it grinds down slowly and it starts to go down, retests and then resumes down, that actually is quite negative. To understand potential short-term support and resistance, we need to draw a couple of more lines here. I'll show you which ones. We're interested to see where price could base out. So this particular support line between these 2 points is a very good one, and it would play around the 22,400 mark. So just above this massive buy area. And don't forget, those massive buy areas and massive sell areas are zones formed from the CTKS method, which is explained extensively inside the masterclass. We also need to understand where past resistance has played out, and drawing our resistance line through here, we can see that it's tried to act as a support line and done a quite good job of it as well. So just bear in mind that if price comes back to this secondary support that we mentioned here, so we call this now the primary, secondary and tertiary. It really depends on how many support lines you have in, and you can see they can change. As you add more in, the numbers shuffle around. So we can see that this level of 22,800 gives a really good indication of the strength or otherwise of Bitcoin. If Bitcoin starts to fall below the 22,800 mark, it could well be on its way down to 22,350 odd. So just bear this in mind. If we start to see support and a re-push back into this really heavy sell level, and you can see the sellers are getting tired. The buyers are keeping on coming in and coming in and coming in, and the sellers are going, oh, please, again? The issue is there's going to be a decisive movement in either way, either to the upside or to the downside. But from a stacking of probabilities, that's not exactly 50-50, because the probabilities are that we can continue to grind upwards and exhaust the sellers, because we're seeing increasing levels of support so long as they don't get violated. It's important to be flexible. If you see a violation of the rules, you just say, okay, well, the probabilities have gone the other way now. You have to be as flexible as the market is, and the market is incredibly flexible. Another thing that you can look at to stack your probabilities, and masterclass students, you get this one inside TG34. Inside the masterclass, I do very, very deep dives into not only the crypto market, but the stock market. It all matters. All markets are intercorrelated and interdependent. We can see the Bitcoin longs were piling in, and now they've been piling out. Why is that? Because they've been liquidated. They've been literally taken out of the market. The shorts are remaining solid and they're remaining strong. They're just trying to gather their strength. Our analysis on Bitcoin is really, really important at the moment. If we start to get above this extremely heavy sell level and we turn it into support, it could be absolutely off to the races for Bitcoin. And that means the entire crypto market. Remember when FTX exploded or imploded? What actually happened is Bitcoin sunk and it dragged the entire crypto market with it. If Bitcoin explodes upwards, we're going to see an explosion right across the board. The same holds in reverse. If Bitcoin melts down, the crypto market melts down with it. It's incredibly important to keep your eye on Bitcoin first and foremost. Let's consider the devil's advocate side, that the shorts take over and they liquidate the longs all the way down to the 22,300 mark. The key thing to understand, there's a lot of buying support between 22,300 and down to around 22,000. So it's likely to catch all the sellers unaware. Why do I say that? Because if you actually zoom out, and this is why you must look at all of price history, not just recent price history. A lot of people would say, a lot of technical analysts would say, if you actually lose this red line support, you're done. You're done for, because the price will just melt down. It'll just come down and down because there's no support here. That is very, very short-sighted. Bitcoin has not traded for just a couple of weeks or a month. It's been trading for over a decade. We need to understand where market structure is actually playing out, and that's why we have the CTKS method, to form a very, very professional understanding of where the real support and real resistance is inside the market. A lot of people thought I was nuts when I said to people there was a lot of selling resistance through here. People said, "Oh, Ken, you don't know the market very well. It's just going to explode. Look at what it's done." It doesn't matter what it's done. It matters where the smart money looks. If you don't know what smart money knows, well, you don't know what smart money knows. You really want to know what smart money knows. If we look at price action like this, a lot of people would just expect, okay, if it loses that, it's going to tank because, yeah, there's nothing to support it short term. But these markets are not looked at from a short-term perspective by professionals. Professionals look with completely different eyes to retail. It's literally taken me 30 years to perfect the CTKS method, and it's very, very strong, and it's proven each and every day on the community channel. The reason I needed to explain this, I'll go back to the longs and the shorts, because retail traders and investors will be looking at this line like an Armageddon line. It is not an Armageddon line. You've got so much buying support between 22,300 and down to around 22,000. So please just bear this in mind. It will catch a lot of people off guard. People will be going short exactly when the buyers, the smart money, will be entering the market. And if you've ever bought at the top or sold at the bottom, you're just only missing out on seeing what smart money sees. This will happen to a lot of people. A lot of people who don't watch our community channel will actually go short when they should be going long, and they'll go long when they should be going short. But we don't go short in our community. I'm just explaining the leverage traders, which is a very good way to lose all your money until you know exactly what you're doing. In TG34, I extensively explain the longs and the shorts, and I provide this particular chart to you so you can look at it anytime you want. That's really the purpose of the masterclass, to equip you with the skills that you'll need. So it's all about knowledge transfer. When we look at the shorts at the moment, if the shorts start to spike up because the longs have been very heavily hit, we could see some negative price momentum as more and more longs get hit. But we're aware of the internal market structure, or the objective dynamic market structure that's inherent in Bitcoin. And we need to be aware of this, because without this, we don't know what's happening with our alts. I'll prove that just a little bit later. In the past 24 hours, there's been 110.05 million in liquidations across 30,629 positions. And when we look at total liquidations across the past 24 hours, about 51% long. Across the past 12 hours, 72% short. Across the past 4 hours, 73% short. And across the past hour, 84% short. So we can see that even though a lot of longs came out of the market in the past 24 hours, the bias is to upward price momentum increasingly at the current time. This is giving us another view of a potential going up in the market. Positive price momentum, increasingly so. And when you look at the liquidations right now and you compare them to typical weekend action or pre-weekend action, there's a lot of smart money that's in the market right now. And you can tell it's smart money because the volumes are quite high. Smart money always comes with a lot of money to the table. This allows us to look at this chart with different eyes. We can actually look inside here and say this immediate support around the 22,990 mark and around the 22,950 mark, for example, those lines should hold. We wouldn't expect too much of a negative downside, and we wouldn't expect price to collapse through here underneath the 22,800 level. We just wouldn't expect that at the current time. And don't forget, the markets can change on a dime, so we need to be able to change with them. Turning to the top gainers in the past 24 hours, AVAX just rocking and rolling, up 17%. TWT, we talked about TWT in a previous episode. It's now starting to rock and roll, up 13%. CRV nearly 8% up, followed by GMX, TON, Rune, Casper, and FraxShare. The greatest losers currently in the past 24 hours, top 100 threshold is down, taking out the pole position, nearly down 10%, followed by eCash, Axie Infinity, Phantom, Aptos, Flow, Aave, and Kava. Looking at the top 8, and I've been saying a lot about we need to keep our eye on Bitcoin. But why? Why, Ken? Why do we have to keep our eye on Bitcoin? Why can't we just go and cuddle our beloved alts? Because our beloved alts get their strength from Bitcoin. You can see when Bitcoin came down here, what happened to ETH? It came down. When Bitcoin rallied up, what happened to ETH? It rallied up. You can see this occurring all the time in these charts, and in fact it doesn't really matter what you look at, it's the way it goes. But you say, hang on Ken, what about this USDT, USDC, BUSD? What about those? They're acting weird. They're all over the place. They are stable coins, and stable coins are not stable, and they never ever have been. Masterclass students, please check out TM14 and TM15. There's some really important developments you need to look at on the charts that I shared with you. Looking at the returns over around the past week, Bitcoin is up nearly 10%, Ethereum is down 3.3%, BNB up around 1.1%, XRP 1.3% up, and ADA taking out the greatest gainer. In terms of the alt, not Bitcoin. Bitcoin is not an alt. Everything but Bitcoin is an alt. ADA taking out a little over 6.2%. When we looked at the next 8 yesterday, what did we see? Doge, Matic, Sol, DOT, SHIB, Litecoin, the stablecoin DAI, and AVAX. Look at AVAX rocking and rolling. There's been a bit of a reshuffle. AVAX has taken over this position, followed by SHIB, Litecoin, and the stablecoin DAI. And when we look at Doge, it's up around 1.5%. Matic doing so well, over 14%, nearly 14.4% up. Solana down 2.05%. DOT up 7%. But I want to really draw your attention to Bitcoin's gravity. You can see how Bitcoin's gravity does impact these alts. Not always moving in lockstep, but more than likely moving in lockstep. And when they don't, they tend to break out afterwards, as we saw here in AVAX. So just some things to keep in mind. And then followed by Litecoin. That blue line is Bitcoin's relative price momentum. You can see it's always impacting the alts. A lot of people don't look at this, and therefore they leave a lot of money on the table. We talk a lot about the weak become strong and the strong become weak. We see it all the time. Together we've done 790 daily videos. Over that period of time, you get to see some patterns playing out. It's all in the pattern recognition. Keep your eye on that. Masterclass students, it's good to get a refresher on TM20, tracking and understanding shorts and longs. Also, we talk about it a lot, directional correlation, divergences and groups, and pattern recognition inside the masterclass. Across the next week, I'll be announcing the very, very fortunate awardee of the Jason Rice CTKS Partial Masterclass Scholarship. And thank you so much, Jason, for your kind generosity. The CTKS Masterclass is 30 years plus of knowledge transfer. It does require persistence, dedication, and commitment. And we always say inside the masterclass, just go slow to go fast. There's actually a thriving community inside the masterclass. And I just wanted to share with you, there's currently 10,589 comments inside the masterclass. We have a good old chat with each other. As a community, we have a positive excellence focus. We understand that when fear gets in control of our actions, nothing good follows, especially inside the market, and especially inside relationships with other people. We have an amazing community, and you can see the vast generosity of people who want to help others by learning how to actually handle these markets from a technical perspective and from an emotional mastery perspective as well. If you would like to apply for the CTKS Partial Masterclass Scholarship, the link is in the description of this video. Stay safe out there, my friends. Have a wonderful weekend, and I look forward to joining you tomorrow. Bye for now.